risk to reward, and win rate. So a few little facts. So 95.5% of traders lose money over time. Even if they're good technical analysts, these losses are mainly due to poor risk management and psychology. So yeah, there's a very big difference really between trading or between analyzing the charts and actually trading the charts. So yeah, in order to kind of, you've got to ask yourself, like, are you here because you enjoy looking at the kind of the TA and you enjoy kind of watching the charts, or are you actually here to make money? And that's one big thing, is that I'd say a lot of this 95.5% probably here more so because they are hoping to make money from trading, and but don't actually have that as like a clear set thing, as like, I am doing this in order to like make a living or to make money from this. A lot of people just want to do it because they want to be right, or they are interested in where the market's moving and they're happy to kind of take losses along the way from that. Another little statistic, so 7 out of 10 traders quit within 1 year of trading, either through losing all of their capital or out of pure frustration. And I think that's something we've probably, again, seen a little bit of over the last few weeks. Like, this is something that, okay, when we're in a bull market and everything's going up, it's very easy to make money. You just have to buy, and the market will kind of, that it will make you win in time. So a lot of people, and it's the same for everyone, even like the more experienced traders and things, it's you get drawn into that thing of like, okay, you can kind of enter anywhere and the market will make everything okay. Like, you can have bad entries and the market will not punish you for that. As soon as things start to get a bit more bearish, or we're in a range, or things have been like they are for the last few weeks, you've really got to focus on like actually trading, and not just looking at the charts and thinking like, oh, that looks good, I want to buy it. There's a very big difference, because as we've all seen, people who were maybe entering up at the highs of a range or buying on the way down through that whole 50% move down, the price has never got back there yet, and it might not get back there. We're still within a range that's lower than where we were a few weeks ago, and there's no guarantee the price anymore is going to come back to kind of get you back into profit. But again, that's not a reason to stop trading. It's just, in fact, it's even more reason to trade, because you want to have more capital for if it does go back up or whatever, don't you? And if you've made a loss, then you want to get that money back. So yeah, there's just a lot of reasons why people quit, and yeah, hopefully no one here will end up being one of them, because it's all about longevity in this game as well. So, however, becoming a profitable trader is not difficult if you have discipline, patience, and dedication. So it took me a good few years to become profitable. And it took me, well, a little bit longer than that to become like really comfortable and happy with the way that I'm trading. But even then, it's still like a journey every day, and you still got to constantly adapt and to learn to make yourself a better trader, and to maximize everything within your trading. So it's not a difficult thing, as long as you can learn to control yourself and to know what you're doing and to know what the goal is when you are trading. So yeah, just a few little pointers there at the beginning, just to hopefully get get things going. So here's a little quote that I thought was quite interesting. I saw this today. So win or lose, everybody gets what they want from the market. Some people seem to like to lose, so they win by losing money. And I kind of recognized that from my earlier days of trading. So let's say back in kind of when I was navigating the last bear market, and even the bull market before that, there was much more of a focus for myself, with the, I just wanted to kind of, I was looking at the charts in a way that I was thinking, oh, I just want to like take every single trade and then show people that I've done like really amazing trading. And more out of just being interested in what the charts are doing, and a lot of stuff in hindsight, and not actually focusing on it being trading. It was more just like, yeah, I'd be happy to take some losses here in the hope that maybe I'll find a winning trade eventually. And I think a lot of people get kind of stuck in that like vicious cycle of losing a lot, constantly trying to find the winner. So I wrote like, this is particularly true in crypto. It's an exciting market and people want to chase every move due to FOMO and ego. Competition is placed on entries and showing your profits, so a lot of traders seem happy to lose money in the hope that they can get the perfect trade which makes it all back. They lose many in order to win a few. And yeah, again, I think that just highlights kind of this quote, and is what I've been seeing, not necessarily like from anyone here, but just generally around the market. There seems to be a lot of people that are blaming the market, that are blaming things like Elon Musk, and being like, oh, we should be in a bull market, this should have gone up to here, but because everyone's shorting it, you're ruining the market, and things like that. And it's just a lot of blame and a lot of negativity going around the market at the moment, and hopefully that will change. But it's just trading, and I think this is a really important thing for people to understand, is that trading is not about making 100 trades of like $1 in a day, so that you can show off your profit. It's about like making money for yourself, and at the same time, it's not about being scared to take trades. Like yeah, like seeing what the charts do is interesting, but we're here to trade as well. So I think that's quite an interesting point that I saw earlier when I was preparing this. So I just want to kind of go on to this. So technical analysis is just the start. So I think probably everyone in here is a pretty good analyst already. So from what I've seen from everyone, and from the way that I've spoken to everyone already, and I know I've known a lot of you guys for quite a while, I know the majority of you are all good analysts, and this may not, a lot of this might not apply to you as well. But yeah, I think a lot of you are already good. So basically with the technical analysis, it's identifying your setups, knowing your entries, knowing your exits. Just very simply, I think, yeah, everyone in here is kind of pretty good at drawing Fibonacci's. Everyone knows how to do those. Everyone kind of knows how to get your horizontal support and resistance. And I know that, yeah, there are still things within that maybe some of you are still learning, or still wanting to improve, or still to learn new techniques to kind of improve the technical analysis. But that's really just like the tip of the iceberg, I guess, and there's so much more underneath that is really what I want to focus on within these streams in particular, and also in the trading rooms. So I always want to make sure that there's application rather than just teaching TA and expecting people to go away and become profitable traders. It's a lot more about what goes on above that. So we have here risk management. So knowing your position size is a massive thing. I know probably a lot of people again on this move down, buying and then adding to an underwater position, and then adding again to an underwater position, and then getting scared when it goes down lower, and then adding again to an underwater position once we get a bounce, and just really bad kind of too high position sizes, too much emotion attached to that, and yeah, it doesn't kind of work out well sometimes, if that if you're going a bit over the top with your position size. Risk to reward ratio. So I think this is an important thing, especially for anyone who doesn't know what risk to reward they're looking at. But it's also kind of not set in stone. So the thing with a risk to reward ratio is that it says like, okay, here's the trade. This is a 3-to-1 trade or a 4-to-1 risk to reward trade. But it's also kind of understanding like the differences between that and how the market can move, and not being too rigid with that. And then knowing your invalidation. So this is a really important thing. You don't want to be holding a trade if it's been invalidated. So just being able to cut those losers quickly, and holding on to your winners is a really important thing. So knowing your invalidation here above the technical analysis thing. And then finally up at the top, and I think this is the thing that is kind of that final piece of the jigsaw for a lot of people, and in my opinion probably the most important thing, or the most important part of trading, is the discipline and the psychology. So learning to control your emotions. So I know, again, a lot of people within this space get pretty angry or pretty hyped up. Like they'll get really hyped up if they're winning, and start to think like, oh, I'm just, everything's going right, I know what the market's going to do, and things like that. And yeah, you're only one trade away from humility all the time, and learning how to control your emotions and to stay calm no matter what the market is doing is a really important thing. Having patience. So once you've identified your setups, once you know your position size, your risk to reward, your invalidation, having patience in order to let the market come to you is a really important thing. So again, that's all part of the psychology of trading, is having that patience and not chasing the trades. And then, yeah, sticking to the plan once you've made it. And again, kind of like the risk to reward ratio here, this isn't something that's set in stone. So although I say stick to the plan, your plan should be liquid like the markets. It should be fluid. So you should be able to adapt your plan, like I say here, in order to kind of continue to manage that trade, which takes us on to trade management and ability to adapt and react, I guess. So yeah, again, like that ability to be able to adapt and react to what the market is giving you. No one knows where the market is going to go. All we can do as traders is find an edge, find what the highest probability is, and then try our very best to take advantage of what the market is doing. So the market's always going to be moving. You never know where it's going to go, but just finding that edge and having the ability to adapt if things change, which they do every second, is a really important aspect of trading. So yeah, I think that's quite a nice little reverse pyramid thing. A lot of people get very hung up over the technical analysis and miss all of this stuff. And all of this stuff, I'd say, is probably 90% of actually trading. If you're only doing this, you're just an analyst. You're not a trader. So yeah, that is that bit. So finally, maximize everything. And this is something that I am always doing. I want to maximize my risk to reward. I want to maximize my technical analysis. I want to maximize my invalidations, my just everything about trading. I want to get the maximum out of that always. And I think that's, again, what everyone should always be looking to do. So if you're looking at a setup and it's just a 2-to-1, think to yourself, like, how can I make that better? How can I make that risk to reward better? What can the market do to give me a better chance of being successful in that trade? And we're going to go over some ideas and strategies to turn those potential 2-to-1 trades into 10-to-1 trades, and to turn those 30% winners into 80% winners. And again, that's something I really want to focus on. So 25% is the percentage of trades you need to win in order to break even over time using a 3-to-1 risk to reward. So if you're getting 3 times back what you're going to lose, you only need to win 25% of those trades. Again, like maybe 26 when you think about fees and things. But it's not a lot. Like, in order to break even in this market, 3-to-1 trades aren't hard to find, and to win 25% of those is even less difficult to find. Like, it's not difficult. So this is a lot, but so many people still fail. So the best way to become a successful trader is to maximize every aspect. Understanding and mastering technical analysis must always be the start point, but it can never be the end game. To become a better trader, you must constantly look to maximize your win rate and your risk to reward together in order to consistently take higher quality trades. So yeah, I think that's just a really important part, and something that everyone should be trying to do. Like, no matter what your experience is, like if you've got a pretty high win rate at the moment, it can always be better. And mine can always be better. Like, I'm still trying new things every day, and taking trades every day, and pushing myself to kind of get better trades. Again, even if it's just on a small position size, whilst you're experimenting and learning things, yeah, always be trying to kind of maximize everything you can get out of these markets. So that leads us on to some golden rules for trading. So first of all, plan your trade. You must always know what trade you're wanting to take before you take it. If you cannot see a reason which is backed up by technical analysis, then do not enter the trade. Failure to follow this is gambling. So if you do not have a setup and you are just buying blindly, you are gambling. You are not trading. You can kind of, there's a little bit of gray area. Maybe you have an alert and you kind of have an alert that gets set off, and you're like, oh, you're just out and about and you're on your phone, and you whip your phone out and you take a trade. I guess that's kind of halfway between trading and gambling, because you have put in the work to identify a setup with TA, but everything that comes after that is just out of the water then, if you're not really doing anything. And there's a time and a place. You can do this. You can get your phone out and take a trade during the day based off an alert, but it's not the best way to trade ever, even if it does work out fairly often. So know why you want to enter, what is the confluence, and where you would like the market to go. So yeah, why you want to enter. So what is your reason for entry? What is the confluence that you have there? And from that, where do you want, I just repeated the same thing. Where do you want the market to go? Secondly, know your invalidation. What can the market reasonably do before an idea is confirmed to be wrong? So this is why I often say, again, maybe like not to set like hard stop losses, and not to have those hard stop losses in place, because you've got to give yourself a kind of a little bit of wiggle room on those trades, but also to know what your invalidation is. So there's that fine line again between knowing to cut a trade, or allowing it a bit more time to play out if things are still kind of showing they're okay. And yeah, we had a nice example of that, I think, last week on a there was a VWAP trade, wasn't there? So if anyone was here and there was a VWAP trade and I had taken a long off of the VWAP, and a few times it wasn't looking good. It was trading below the VWAP for a while, but the market wasn't doing anything to show that it wasn't still a good idea. So although that trade was underwater for probably a good hour and a half, like it eventually played out well, and the trade idea did work. Whereas if I'd set a hard stop loss on that, probably would have been stopped out and then been a little bit annoyed that I'd missed the trade and lost money. So it's knowing those things of always being able to read what the market is doing, knowing what your invalidation is, but giving the market plenty of time if you can, in order to make sure that you're giving that invalidation a little bit of room as well. So understand that the market can move in many different ways and could pivot before or after your level. So this is something we covered on last week's stream as well. And just, understand that you can be front run on things, and price can move through a level that you were looking at. So it's learning to identify the way that the market moves in order to help you get those entries. You don't always have to take the trade as soon as it happens. You can, again, give things time, wait for the market to show you what it's going to do. More often than not, the market will show you where it's going to go. You just have to be able to kind of see that, and to be able to react to and adapt to what is going on. Know your risk to reward and give it some wiggle room. So again, like I just said a minute ago, if you find a trade that in perfect conditions is a 4-to-1, realize that after fees and imperfect entries exits, this could end up lower. And on the other side, realize that if you want to let your winners run, which is a really important thing, then it could end up a lot higher as well. So nothing's ever perfect. Be prepared to adapt these as well, but still make sure you know kind of what the risk to reward is and everything when you're taking a trade. So then once you have planned your trade, you trade your plan. So if you have taken the time to plan your trade, then don't ruin it by changing strategy if there is no reason to do so. Know where you would like the market to go, but also be prepared to adapt if the market is telling you something different. Your stop loss should always be respected. You do not need to set a hard stop loss, but you do need to know that if you are invalidated, and be prepared to cut a trade quickly. So again, just kind of what I went over there. You have your stop loss for a reason. Respect it. Do not move it if you do not have a reason to move it. Unless the market is telling you quite clearly that, oh, you placed that stop loss too tight, like give yourself a bit of room, or something along those lines, then your stop loss is there for a reason and you must always have one. Trading without one is not a good idea. As I think a lot of people have probably found out recently. Like, you will have those occasions where a stop loss gets hit and the market reverses and your idea was right and you're not in the trade. But in the long run, it's better to do that than it is to get away with not having a stop loss or not respecting your stop loss, and then having one trade where that lack of respect for your stop loss goes against you really badly and you have a 50, 60, 70, 80% drawdown, and you lose all your money. So very important. Respect your stop loss. Then pay yourself quickly to get into a winning habit. Even if you are confident that the trade will play out, it is always good practice to take profits early and get that money in the bank. So this is really important, and this took me a long time to really understand and to really feel comfortable with, is that you've got to pay yourself almost, and some people are different, but for me, I pay myself on every trade at the earliest possible time I can. So as soon as I see somewhere to take profit, I will take that profit. So generally speaking, I'm not sure if anyone's going to see this if I do this on my screen, but if you see like a move going up like this and then it stalls, so say you've entered here and then the market starts to stall, often that's like the first time that I will take profit. And it kind of doesn't even matter sometimes where it is. It's just getting into that good habit. Like, yes, you're giving away a bit of your trade. Sorry, you can't see that. I have like a little annotation thing that goes on the screen, but I think because I've got it on window settings, it's not working, but forget that. You can see my thing. Here goes the market up, 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 then it stalls. Yeah. So there's my little mouse just doing it. I'll take profit kind of at that earliest opportunity, just to get into that good habit and to get some money in the bank. That way you're giving a little bit back to the market. So in order to have that winning habit, and in order to get that win rate, and in order to preserve your capital and to preserve your stop loss, so if you're taking profits quickly, then you get stopped out, you're not going to make a loss, or you're going to make much less of a loss on that. You give the market back a little bit of your trade for doing that. But I think overall, and in terms of longevity and building confidence with your trades, I think it's always good practice to take profits early and just to bank that money as soon as you can. Now, that doesn't have to be a lot. Like, you could literally just bank, like, say you're taking like $100 trade, you could bank 20 quid of it, and let the rest run. But it just helps. And you'll notice over time, even if it's just covering your fees or covering your stop loss in case it gets hit, that in the long run, it does work out a lot better to be doing this. But then, yeah, this next point is kind of contradictory to that. So although you want to be taking your profits quickly, you also have to be able to let them run as well. So you have to be able to let your winners run. So the temptation to close a winning trade early is another big problem. Make sure to take profit, but also to give the trade room to overperform if it wants to. So again, often what I will do, and I'll quickly do this actually. So I will quickly just say, so let's say I have a trade, price is coming down. I take the trade, say at this point here or something. And then we come up, price stalls, I'm taking my profit at this point, and I have my take profit levels identified up here. But quite often what I'll do if I see price moving up is, once you've hit that first take profit, you've kind of just saved, like that trade's there, done, and you can start to trail your stop loss. So you can almost like skip some of these take profits if you still feel that the market is trending in the direction that you want it to. So even if the market comes down, this is all part of trading, but you might just want to skip this one out. Hopefully this makes sense. So again, here are your take profits. You may want to skip that one out because you've not had any confirmation yet that the market does want to change direction. It might come back up here again. And again, you might want to skip this one because you've taken your profit early and you're now letting your winner run. You might want to skip that one unless it starts to show you anything different. And again, you come up to the next one. You may want to skip this one. But at this point, okay, price is coming down. Oh, and look, we've just taken a low here. So now at this point, you're thinking, okay, I've got to be taking profit on this now. And it's just about, yeah, letting those winners run until the market tells you that you need to get out. So there's a big difference here between having this as your safety net. So you've banked that early take profit, But then on all of these, unless the market is telling you, unless the market is telling you that it wants to change market structure, or even on a local level, you can allow these movements to happen because they could outperform and end up being really, really good trades. So yeah, just a little added thing that I like to always kind of have on my trades is that there is that temptation to close early, and a lot of the time that is due to fear. So people are going to be scared that the market is going to turn against them, but the market's going to show you if it wants to turn. It will always show you if it wants to turn. And yes, it takes a bit of time to be able to understand that and to be able to see that, but don't be afraid, and don't be kind of closing out too early just because you think the market is going to turn against you. Yeah, it's a weird psychological thing, especially when you start saying, say you're $100 profit in a trade, market starts coming down, you're suddenly only in $60 profit for the trade. The temptation to take profit is going to be there, but unless it's changed market structure, there's probably not any reason to do so. So yeah, a really important point that I think a lot of people struggle with. And then yeah, that kind of goes into this last point here. So allow the market to tell you what to do. Your exit criteria is as important as your entry criteria. Treat it in the same way. So if you are entering a trade and you've spent time to make sure that you're entering for the right reasons, you've identified your level, you've watched what the market is doing, it's met the criteria that you want it to meet, make sure your exit's the same. Don't just go, oh, look, I'm in profit, I gotta sell. Like, what like exiting a trade should really be seen, it's just as important. So yeah, treat it the same way. And again, you might on occasion give the market a little bit back by doing this, but more often than not, and again by doing a lot of trades, I know, and in particular with Bitcoin likes to trend and keep trending for a lot longer than people seem to think. And it's just a very common thing. So many people might close out of a trade at like the soonest take profit thing, take profit area there. But if you're in a trending move and you're playing it as a trending move, it's very different if you're playing counter trend. Then you have to kind of be looking at this one a bit more. But if you're playing in a trending move, treat your exit the same as your entry. Don't exit too soon. Or again, if the market is telling you that it is going to reverse, then do exit before you plan to. So again, like counter trade moves, you may want to get out pretty quickly, but allow the market to tell you that and adapt to what it is doing. And then yeah, the last little point from today is be brave. So the only way to improve as a trader is by trading. No amount of learning will help you if you do not put it into practice. Take trades, take wins, take losses, learn from every trade and consistently improve. If you see an opportunity, take the trade. Do not fear losing. Taking losses gracefully is as important as winning, and do not get overconfident on your winners. You're only one trade away from humility. So yeah, I think that's just a kind of how I wanted to sum things up today, is that yeah, a lot of people that are scared of taking a trade because maybe they're not feeling comfortable with the way the market is going, or you don't think you know where the market's going to go next. But I'd say the only way you cannot feel confident in what the market is doing is either if you need to kind of cover the basics a bit more and to find a few more additions to your playbook and different setups and things that might be there. And again, I'm we're trying to cover as many of those as possible within the trading rooms and things. So yeah, people's trading vocabulary might still need to be, I guess, improved a bit in order to gain confidence in taking these trades. But if you see an opportunity and it's there, and you know, and you've seen these trades happen before, just take them. Just take that trade, because you're not going to learn to trade unless you do take them. And again, if you don't think you can see a setup, look harder, because there's always something there. Like literally, there is always a trade. The quality of those differs, and there are better times to trade than others, but there is always a trade out there, and sometimes you've just got to make yourself do it. Even if it's just small amounts, you're not risking very much. If you have your risk to reward right, you can take a lot of losses and not really lose much money. But yeah, see it as a, I guess, yeah, in the same way that you kind of pay for anything, I guess, like trading and learning to trade, you've almost got to pay the market in order to get those results back eventually. So be prepared to take losses. Don't be afraid of them. Just don't overexpose yourself if you are going to take losses. So yeah, that kind of is everything within this this little infographic thing that I made. So again, I'm going to post this onto the Discord right after we finish, and also in box. So yeah, I'm going to open it up. I've got another little thing that I want to go over today, but we're at a nice little midway point. So if anyone has any questions or anything they would like to say based on what we've just gone over so far, then I'm just going to open up for like, yeah, let's say like 10 minutes before I go over like the more trading aspect of stuff that I want to cover today as well. So yeah, any questions?